Hey everybody, it's Mike, and I just wanted to give a little update because gold is continuing to rise. And if you're holding the gold miners, you're probably really frustrated because it's not rising with the same velocity of gold. However, I want you to take a look at something. This is the 1 year chart of gold and has reached new highs. However, if you look at this, it's really poised, I think, to have a breakout soon. So if you're kind of feeling like you missed the gold rush, so to speak, you may want to go ahead and look at the miners. Because look what happened to silver. Gold was running, silver was doing nothing literally for like 3 years, and then all of a sudden, silver shoots up like 20% or something in like 7 trading days. So one of the things I would recommend is the GDX VanEck Vectors Gold Miners ETF. And that's because if you really don't know the gold miners, the individual companies, you may end up buying a stock that will go nowhere even while the gold miners go up. So if you don't really do a lot of research in the gold miners, just go ahead and get the ETF. And one of the things I'm going to do, I'm actually waiting until probably the end of the month to do this trade, but I'm going to put in a call calendar trade at 50. I'm going to buy the 50 January 2022s and then just sell the front end contract. So I'll be able to just collect that premium every month as the gold mining stocks, in my opinion, will probably drift upward over the next 12 to 16 months. So why don't I buy the individual gold miner stocks? And it's really because they're just unpredictable. I mean, here, we'll look at the best of breed here, which is Newmont Corporation. And it's down, but here's the problem. If you buy like a best of breed of Newmont is they may make some acquisitions over the next couple of months. They may buy some of the weaker gold miners, which is great for the company long term. But in the short term, if they pay, a couple of $1 billion for a smaller miner, they're going to lose probably a lot of that money, because usually what happens, the company that gets acquired is their stock goes up, and then the company that does the acquiring, their stock goes down. So it's kind of important that if you're not going to do your research on the individual stocks, just go ahead and get the GDX here, which is currently at 44. My guess is the market right now, I'm doing this on August 7th, is probably going to drift downward over the next couple of weeks. So when I put in that 50 call calendar spread, my guess is that the gold miner, the GDX, may go down to like 42 or 43. So go ahead and take a look at the GDX if you feel like you've missed a train on gold, because if you look at it, it's been rising. It's been performing really well, but it's obviously gold itself has been outperforming, or at least the GLD. So that's my message for today. If you feel like you missed out on gold, look at the GDX, because I think the GDX, when people get frustrated and see that they missed out on gold, they're going to go to the gold miners. And typically, when you have a bull run, like towards the end of the bull run, the gold miners outperform gold almost like a 2-to-1. Like GDX will rise like silver. It just tends to rise faster than gold. So go ahead and take a look at the GDX, okay? Thanks. Bye.